Hey, good morning, everybody. I'll do another day of trading here. But before I jump into actually buying the Walgreens, I wanted to take a look at uh, really the US dollar and the effect that it's having all around the world, why countries are selling the US dollar. And so I'm going to look here at this MSN article. A Bear Stearns moment waits if actions like the Bank of England intervention don't calm markets, Bank of America analysts say. And so, if you don't know what happened in England, uh, essentially what happened is that the government released a new budget, which essentially cut taxes and raised government spending, which investors did not like. And so they began to ditch the currency there, and they began to ditch the gilt. And what what happens when you sell the gilts, or when you sell something that pushes the price down, and the yields go up. And so all the pension funds that are in England, they're holding all these gilts in their balance sheet, and they have been levered up in order to get a greater return, in order to meet their the demands of the pensioners. And as a result of the price of all the gilts going down, they got margin called. They needed to post more collateral. Uh, of course, they don't have it, and so they went to the government and said, "You need to bail us out." And that's pretty much what happened. The government there began to sell long dated treasuries in order to buy short dated ones to support the price. And so you can see here, the pound versus the dollar, and you can just see it crater because investors wanted to get out of the pound, and they go to where it's safe, and they go into the dollar. And so that's part of the reason why you saw such a big crash in the stock market last week. We'll get into that in a second. Um, and this is happening all around the world as you get these currency problems popping up as interest rates go up. Not only developing nations are kind of failing, it's also developed nations. You can see that here with the Japanese yen. This is from just, I think, 12 days ago. Yen strengthens after Japanese government dumps dollars to prop up the currency in its first intervention since 1998. So same thing. The Japanese central bank has been in the process of pegging their yield curve uh, pretty much at zero. So that way the cost of government debt does not go up, because if it did, the government would default on their debt. And so they have been just printing their currency in order to buy um, the Japanese bonds. And so they've been holding down the value of those bonds, but then they're printing so much currency that their currency has just been devaluing like crazy. And you can see that here in this chart. You can just see the value of the dollar versus the Japanese yen has just been inching upwards at a pretty fast rate. And just about 12 days ago, then the bank came out and said, you know what, we're going to pretty much not let the Japanese yen go above $145, because essentially things are getting tough. And if you think about the Japanese economy, how they work, they don't produce any of the essential resources that they use in their economy. They have to import everything. They're importing their oil. They're importing all their raw materials. Well, they pay for all those raw materials in U.S. dollars. And so if your currency is getting devalued at such a fast rate, you're able to import less and less and less, and you have to pay more and more and more. And so Japan, which hasn't seen inflation in decades, is now getting inflation because of the currency swap rate. And so if they cannot get those resources, they can't produce anything, and it just goes into this negative feedback loop where nobody really wants to invest in Japan because they are on a downward slope. And so, as the dollar strengthens, and we can look here. I don't know, do I have the DXY pulled up? This is the Chinese yuan. You can see also strengthening. The Chinese then began to sell US dollars in order to buy their currency. And that's exactly what the Japanese were doing over here. They began to sell US dollars in order to buy their currency, in order to give their banks, a way out from a financial crisis. It's not a sustainable thing. They're hoping for something to change. But from a macro level, uh, there's nothing really coming down the pipeline that would mean that their currency is going to stop depreciating against the dollar. So long as the Federal Reserve continues to raise interest rates in order to fight inflation domestically, you're going to see the US dollar appreciate. And it's going to continue to put more and more and more pressure on all these other nations whose debts are in US dollar, or at least the companies that are in those nations, their debts are in US dollars, have to buy all of their raw materials in US dollars. They sell whatever they make in US dollars if they're exporting it, but then they have to pay all their expenses in their normal currency. And so if dollars continue to appreciate and gets more and more expensive, they're going to have more and more trouble paying their debts. You're going to start seeing defaults. And that's exactly what's happening in all of these nations. And so you saw it with Sri Lanka, you're seeing it in China, you're seeing it in Japan, you're seeing it with the Bank of England. The question is, what country is next? And so let's just go right back over here to this MSN article. And scroll down here. And you can kind of see the things that I've already mentioned. The fastest and most aggressive monetary policy tightening in over 40 years by the Federal Reserve and central banks around the world has rudely awakened a highly leveraged system that equity derivatives analysts led by Benjamin Bowler. And so, as I mentioned before, the Fed could be faced with a trade-off between fighting inflation and maintaining financial stability. So if the Federal Reserve in the US, if they cut interest rates and they began to stimulate rather than try to pull back the economy like they're currently doing, it would provide relief for all these other nations who are just getting crushed under the weight of the dollar. But instead, because we'll see here in 2 weeks what the inflation number is, we have this persistently high inflation rate. So what's going to happen? They're going to have to continue to raise interest rates because that is how they think they're going to crush this inflation. U.S. stocks rallied for a second day on Tuesday, and gilt yields have dropped considerably since the Bank of England intervention. But Bowler noted the S&P 500 index hit several year-to-date lows last week, as did the FTSE 100. Thus, this is a sign that central bank credibility is already dented and strengthens our view that the biggest risk to markets is the test and fail of the Fed put. And so, in the past 2 days, we've seen the markets just go straight up after a really, really bad quarter and a really, really bad September. And I think there's a feeling that, hey, maybe we're onto some sort of either a bear market rally or maybe we've bottomed. I've seen some as I was doing my research on Walgreens, people think we're near the bottom, but there are just these looming risks. If the U.S. dollar does not change direction, you're going to see continued stress on a highly levered system, and that can't do anything but provide surprises to the markets, and it's going to be surprises to the downside. And so I don't know if they're coming, I don't know when they're coming, but the risk of them coming is very, very severe. And so these past 2 days I've been watching the markets. They're going up, but I'm not getting too antsy to jump in and buy. I'm watching to see what happens. All right, so let's take a closer look at Walgreens. That's what I want to buy. If I go here, if value indicator. Walgreens here trading almost at $33 now. It's got a buy with an average value of $121.48. Not much growth here from Peter Lynch's model. I don't mind that. I don't value this one at quite as much for the kind of investing that I like to do. The kind of investing I like to do is dividend paying stocks with a good dividend growth rate that then I can sell. I can either sell put options to get into them or covered calls in order to get a little bit extra return on top of the dividend. Book value is just trading right about what it's worth. And I like that. And then beta is just something else. How much is that stock moving in comparison to the rest of the market? It's not moving much, or it's not moving as much as the market. Again, it's just something I want to see. I don't want to see a whole lot of volatility, especially as the VIX, has been up recently. All right. I was looking at Franklin Resources earlier, but there's no contracts I like to get in. There's none of the contracts I want to get into available quite yet. So we look over here at a put. What I want to do is I want to sell a put. What that means is that if at the end of this contract, which is on October 7th, a Friday, if the stock is below this price, whatever price I buy at or I sell at, then I have to buy the stock at that price. And it's 100 shares. So here you see it's 14 cents for a $32 contract. That gets multiplied by 100. So if I sold this contract, I would be paid $14. And if I bought the contract, which would be the right to sell it at $32, that would cost me $14. Well, I want to sell. I kind of want to get into the stock. Not kind of. I definitely want to get into the stock. And I want to hold it for a long time if I can. So I'm happy to really get into it at any price here. Obviously, the lower the better. So I want to sell this contract. So I get paid $14 today. And then if the contract gets exercised and the price is below $32, I will then pay $32 per share to buy it. So at 31, so I want to look at something. My goal is an annualized 20% return when I'm doing my puts and my calls. It's not always realistic, and I want to play it fairly safe. Like I said, I think there's a lot of risk to the downside for most of the market. So I am just gonna see here at that price there, 31.50. You do 0.07 divided by 31.5 times 52 to give me the annualized return, and that's about 11.5%. So do I like 31.50? Let's go over here to the chart. What are we looking at? We're looking at the 20-day. Let's look at the 1 year. Actually, zoom in a little bit more and let's go 6 month. Zoom in. Volume profile right here, right at about 31.50. 31 is maybe a little bit more where I'd like to be. That's below the previous low, which again, I think we're going to new lows. Let's just see. At 31, we got 3 cents. It was 4 cents a second ago, but we'll look at 0.03. 0.03 divided by 31 times 52. And that's a 5% return. And I think that's where I want to be. Let's just look at the one more chart. 1 day. I just want to see what's happening here. If it had a sign of going downward, I might wait a second just to see if that contract pops up by another penny. But we are moving flat, very flat. It's just sitting right here in this volume profile. Is it going to sell off from here? That is a fantastic question. I could not tell you. Everything is just super neutral, and all the momentum indicators So I don't think I'm going to wait. I think I'm just going to do it here. So at $31, I want to sell one of these puts. $31 strike price, 3 cents a share. Confirm and send. And there we go. It was filled. And so that expires on Friday, and then I like to keep my contract short. You can do a contract way out into the future, you know. You can go all the way out January 2025, and you can sell a contract at $32.50 for $5.90. But I couldn't tell you, you know, in 2 to 3 years what is Walgreens going to be worth. I don't know. I just know that they've got a good trajectory with their dividends, with their dividend increases. You know, they've got the good uh, cash flow model going into the future. They've got um, they're strong now by comparison with their peers, but you know, I don't know. So right now, I think it's a good valuation. I don't want to buy in 2 years. I want to buy uh, shortly. I don't know exactly when, but we're just going to keep watching it. We're going to keep selling puts, and if it keeps going down and we get filled, we're going to be happy with that. All right, everybody. Thank you for coming in, joining me. I will probably be back on Monday with another live stream as we renew our contracts and see if any of them got filled.